Well, let's welcome on board Sushil Choksey. He's tracked many an AGMs of Reliance. Who better than him to throw some light on what he's expecting from this one? Sushil, hi, morning. I want to first talk about exactly that. How many Reliance AGMs have you tracked so far?
I'm familiar with the company since listing, but how many AGMs you could have attended that I don't recall. But initial years when there were physical AGM, I would have attended most of them.
Okay, so since listing, you've been tracking this one. So, what's the anticipation now from the 47th? Any big bang announcements, you think?
I think, good morning first. Thanks for having me on the show. I think what we need to see is a broad vision, what Reliance is going to throw on the next 3 year of capex cycle on all the verticals, starting from oil to gas, oil to chemical is stable, whether any further expansion on plastic and fiber intermediates is possible. The gas division is on upward swing, so the production possibility of doubling from here in next 2 3 years is there. Whether they further explore, because gas energy needs of India are increasing and we are import dependent, so whether they further invest there. In the same vertical, the new energy division, whether the silicon to module and hydrogen, what kind of outlook, where have they reached as on current? I'm sure the solar module business is starting this year because that's a capital requirement for hydrogen business. So whether 10 gigawatt or 20 gigawatt will roll out in next 1 year, one needs to see it. And what's the outlook on hydrogen implementation and the production commencement? So the new energy, which is showing a small part of Reliance balance sheet, is likely to become a very big part over a period because the world needs new energy business to, because of the carbon footprint and environmental issues and various aspects which we can discuss. So the cash cow of the company has always been the oil to O2C division along with gas currently, and they have well supported the retail and telecom to the growth path where we stand today on both the businesses. So my personal take is the market is obsessed about demerger and listing of retail and telecom vertical, but there is possibility that some better light after CCI nod on the media also, that in future we may have one more company emerging out of after the joint venture with all the partners and a listing at a later date. So people today talk about one plus 2 plus 2, but I suppose it will be 2 plus 3 in the near future. That's the way to look at it.
Sushil, but purely in terms of unlocking, don't you think it's high time that one gets a sense about when the unlocking will happen? Because the sum of part of Reliance now, retail is bigger than Geo, and Geo is actually bigger than their O2 business.
I accept, but I suppose there was some investment phase which was rolling out in last 3 4 years. We started with COVID when the money was sought from global investors. They have spent over 3 to 4 years, depending which partner we're looking at, and scenarios ready and ripe. Whether they harvest with the current market condition, whether in next 6 months or 12 months, I'm quite sure retail and Geo will, one of them will have a listing, and it looks like retail will be first or Geo will be first is the debate. But looks like telecom may go first and retail follow.
Do you expect anything in terms of the capex specific number? Because that's where the moving part is, and you know the thumb rule which everybody uses, I'm breaking it for our viewers here, is what I've learned over the years is that when the Reliance capex starts, the stock underperforms. When the capex stops, the outperformance starts. Do you think large part of the capex of the new energy business, which is hydrogen, clean fuel, that's over, and we are unlikely to see any big capex number this time?
Because the balance sheet indicates they have spent only small part of the capex what they've spoken about. So the free cash flow of the current business is supporting the capex cycle. So I don't see capex having any dent from a perspective where shareholders are concerned. But hydrogen and solar business can scale to many heights. The world's largest solar company is a 90 gigawatt company, which is 3 times India's production on module. A single company called Longi. So if Reliance has aspiration that hydrogen is going to be exported from India between few conglomerates from India, we'll need much more solar energy, which will need much more hydrogen. It depends on the pricing, what they have aspiration for $1 and $2. range, which will the green hydrogen, that would decide the capex cycle. So a 10 billion and a $15 billion capex cycle for next 1 or 2 years to roll out is not a big number for Reliance anymore, because the aspiration is to double the balance sheet in 3 years or 4 years. We don't know, but that is the way to look at it, because thing is that the free cash flow and the earnings has a potential to support all the divisions. And if you look at a fair value of each division, whether oil to chemical along with new energy, 800 plus 200 at 1,000 bucks, telecom at around 1100 rupees, retail at 1300 rupees, and other JVs at 150 to 200 rupees, including media. And if you take out debt, 32, 3300 is the ballpark number. Every large brokerage house, whether it's Bernstein, Jefferies, CLSA, Kotak, everybody's put as a target on a estimated revenue and earning basis on the current year. What we need to see is how the current momentum of Indian economy and a consumer at $2,500 per person GDP, if it's scaling to $5,000 in next 5 years or 6 years, if Indian economy is going from current 3.5 trillion to 5-6 trillion and 10 trillion aspiration, the consumer is an aggressive spender today in any business. You can see whether the financial entities are reporting, consumer credit cards are reporting, footfall in retail is concerned, airports are concerned, flights are concerned, hotels are concerned, wedding events are concerned, or overseas travel is concerned, or LRS schemes is indicating. So Indian consumer is an upswing like what China was visible 10-15 years. So Reliance is a proxy to many of these businesses indirectly, even with the hotel investment, what they have in a smaller percentage. The thing is that I personally see, if you're looking at Indian consumer behavior, you're buying a car or a consumer durable, plastics are required. You're buying a fabric, you need fiber intermediates. The similar way retail and uptrend on many of these global companies which are making partnership and local ventures for India on the retail footprint. So the scale of growth, will Reliance Retail double in 3 years or 4 years? Has Jio with 5G and ARPU now showing an uptick? Can it get to that aspirational number which Bharti is talking about, 300 and 250 range? So the kicker in profitability and revenue both is huge now. And the consolidation phase of Reliance in last 2 years is over. So do we get our leg up? And does market support that? We need to see with the current level of market. But I'm very sure that if Jio and retail has a play to play in the market with demerger or some
All right,
kind of
Sushil bhai, really appreciate your time. Reliance AGM live coverage 2 o'clock on ET Now.
If you like this video, then like, share and subscribe to ET Now.